Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In today's economic news, the most important one is of course the Bank of England's monetary policy decision, which is taking place later today. Now folks, the expectations are that the Bank of England isn't really going to move the interest rate because they've already done that previously during this coronavirus pandemic. But it is expected that the Bank of England is going to keep its tone extremely dovish. Now, that can really help the FTSE 100 index. Why? Because on a daily time frame, as you can see on the chart, the index is very much in battle with the 100-day moving average. And if the Bank of England keeps its monetary policy tone a lot more dovish than the anticipations are right now in the market, it can really help the index, the FTSE 100 index, to move above that 100-day moving average. Now, moving away from the FTSE 100 index and focusing on the US indices, such as the S&P 500 index, the Dow and the Nasdaq, of course, once again, it is your Nasdaq index which is really leading the gains, and the Dow Jones index is still the weakest index among the three major indices. As you can see in the chart, the Dow Jones index on a weekly time frame is really raising some serious concerns for me. Why? Because the index is failing to cross above its 50 and 100-week moving averages, and that is the major concern for me and among the technical traders as well. Why? Because if the index cannot move above these two critical moving averages, it is highly likely for the Dow to go back and visit the COVID-19 low. And of course, speculators continue to speculate and keep saying that yes, there is a disconnect between the equity market and the reality. And perhaps if the index fails to go beyond those points, then we could see some sort of sell-off. But one thing that can really help the sentiment today is the upcoming US weekly jobless initial claims. Now remember, there are two of them. Firstly, it is your initial, and secondly, it is your continuous. Now, of course, the trend for both of these data points is very much displaying that yes, some sort of a bottom is in play and we are consistently getting a better reading. Now, the question is, how long will it take for us to go beyond, to drop to a level where market feels comfortable? Now, what that level of comfortability is, that really depends on the coronavirus and the vaccine and the pessimism around it. Because right now, there are genuine concerns about second wave emerging over in China, especially in Beijing. And of course, China has taken some serious measures to control and contain that virus. And the PBOC, meaning the People's Bank of China, is very much determined to provide its unwavering support for the equity market. And it is highly anticipated that the PBOC is going to lower the RRR ratio once again in order to boost that liquidity into the system. But remember, as always, you can protect your upward and downward positions by using AvaProtect. That's all for today. See you guys tomorrow.